Now, more subjectively, what we heard from the Fed was, let's say, some concern on what they're looking at for rate cuts ahead. Good afternoon. We have a lot to cover here this week with inflation data, some jobs data, and of course, the Fed decision and press conference that came out just yesterday. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to leave you feeling more empowered and certainly, again, have a lot to cover this week that hopefully should get you a little up to date on where things stand in the markets as well as what is driving it. So before I get into the Fed, the main event, let's call it, of today, I want to touch on a couple of things from last Friday. We had basically consumer sentiment came out, and had ticked up slightly. Both income and spending were up a bit as well. So kind of generally consumer strength. We had PCE inflation numbers come out, which was very timely, right ahead of the Fed meeting, of course. So we had the headline number at 0.3% and the core number at 0.2%. These were both right in line with expectations. Not a whole lot to write home about, of course. That said, it remains elevated. But again, these were in line with expectations, so not a big surprise here necessarily. On the job front, though, we did have a bit of a surprise. So job openings Tuesday was higher than expected, showing 7.7 million job openings here recently. So this was all very timely. We got a glimpse at the consumer, we got a glimpse at inflation, and we got a glimpse at jobs, all right ahead of the Fed decision there just yesterday on Wednesday. And that's where we'll pick up. So yesterday, the Fed, number one, made their decision. For those who haven't seen yet, they did decide to cut rates. Not much of a surprise here, although there were some folks that were getting a little concerned that they may not. Either way, they did decide to cut rates by 25 basis points. So right now we stand at 3.5 to 3.75%. But what's important to note is that there was some division amongst Fed members. I think one even wanted a 50 basis point cut. I think a few were talking about 0. So there was definitely some division across the Fed members there on what they're looking at here moving forward. There's a number of Fed members, a majority, I believe, actually, that want 0 rate cuts next year. So it's very important to watch this. The median projection is that there's 25 basis points of cuts in 2026. So again, 0.25%, right? So this is really important, and I'll talk a little bit about how this translates to what Fed Chair Powell shared in the press conference to follow. But again, the highlights, actual data, 25 basis points, a divided Fed, and basically a median projection of 25 basis points of cuts into 2026. All right, now, more subjectively, what we heard from the Fed was, let's say, some concern on what they're looking at for rate cuts ahead. So they pointed to the labor market a lot. He shared a lot of concerns around the labor market. However, he did mention specifically that this was from September data. So obviously a little backward looking. And this is going to be very important based on what the Fed shared moving forward to pay close attention to is the labor market data that comes out. So we will definitely keep you posted as we get more of that. But basically, the labor market seems to be something that they were watching very closely. He did say that they still expect or assume that their long-term inflation expectations are consistent with this 2% goal. This has been the theme, though, for some time now, so for what, 3 years, 4 years? So, just keep in mind that this long-term inflation expectation of 2% has still been a challenge to hit, all right? But nonetheless, they did say that. And then the biggest thing I think to take away from the press conference was he had said policy decisions right now are a close call. And I think the general theme was that if they are going to make any cuts in 2026, it may not be many, which obviously the median projection suggests that as well. It kind of suggests 125 basis point cut. That's kind of the takeaway I got, maybe more so from the press conference that followed as well, is that the cuts in 2026 seem less likely than they did just a month or so ago. So we'll continue to watch that throughout 2026. The reality is that they hopefully and they will change their path based on as they get data. But this was relevant because what they project into 2026 has an impact on like the bond markets, mortgage rates, all that, because those are more forward-looking markets. Whereas the rates themselves that the Fed dictates are dictated, right? Like there's no market reaction to that. But again, what we're used to, what we experience, whether as investors or borrowers, is really more driven on expectations from the market ahead. And this could suggest that the market may not be pricing in many more cuts in the next year until we see reason to do so. So just be aware of that. I think that's the big takeaway. And get ready, because next week there's a lot of data coming out to see where things are more real time on some of these aspects that the Fed is watching. So we get the employment report next week, we get retail sales, and we get CPI. So be sure to tune in next Thursday. Again, over the next 7 days, we get employment report, retail sales, and CPI or inflation, and we'll cover all of those. We will skip the question of the week because obviously we had a lot going on with the Fed here this week, but hopefully this was helpful just to kind of break apart what we heard from the Fed as well as what the decision was. And be sure to tune in next Thursday again, where we will cover all of these key aspects the Fed is watching after the meeting, which ultimately will really give us some insight into what this may mean for next year as well. In the meantime, have a great upcoming weekend, and we'll see you next Thursday at 3.